Hey guys, what is going on? Just testing this video, making sure the sound is good. Seems like it's working. Seems like it's working. Yeah, good. And the quality check. Let me just double check the quality over here. Yep, we've got 1080p as well. Seems like it's working. Yep, 1080p looks good. Yeah, sweet. Cool. Pretty happy with that. Now let me just bring up the live chat. Make sure that's working. Where is the chat feature? Yeah, good. Seems pretty legit. Quite happy with that. Sick. Alright, so if there's any issues, definitely let me know. But for now, it seems like everything is working pretty well. Let's have a look. So yesterday we were looking at a few pairs and we had Euro Yen as a trade. So we'll have a quick look at that as well. If there's any issues with the stream, please let me know so I can kind of fix that, just because it's the first time I'm using this screen share, which I think will be a lot better for most people anyway. So this was the Euro Yen trade we took. Now, even though it's pulling back, I'm still quite happy with it. You can see that I'm a little bit more aggressive with my stop loss at this point, just because of how we've moved. If you wanted to be lenient, you can do. You might potentially survive this, but you know, just in terms of just accumulating good trades, this was solid. So as we saw yesterday, you know, we came up into these areas. It was between this one and New Zealand yen. New Zealand yen was definitely another nice one as well. So that would have been a 1 hour entry right there for me. I would have probably taken it about here in this region there, and I would have set it just above 25 pips, and that one would be running for around about 3.8 at this point. Still, I mean, you know, with the Euro Yen one we took yesterday, this was pretty decent in itself. I'm quite happy with that trade. So what the whole trade idea was, and I'll just go back to the daily, is we had the value area, we came up, we tapped above it, we basically had the signal confirmation. So what we could see is that price was already up in these areas, which is a great signal. And then as price then had some strong pushback, we then started moving, but we didn't retrace that candle. We kind of just had a bit of indecision. And then I knew within that area we're most likely going to be getting accumulation for a move. And the way that I saw it on the 4 hour was we basically had this sharp pull up here, which essentially retested this bit of price action there. So then it did that. And then it came down. And then as it came down, we had another correction and we sold off and tested the low. So at first I was then looking at, is this going to be, you know, a part of some sort of structure? Then I thought, okay, that's a possibility, but perhaps maybe we're not developed yet. So what I did say on the 13th was, let's wait and let's let these pairs develop. So I wasn't looking at EJ directly, I was actually looking at CJ at the time. And we had a few questions about GJ and so forth on it, but essentially there was no pairs that I was looking at to take the trade on immediately. As price then further down the line developed a little bit more, what we then noticed was after this accumulation here, we then had this sideways price action in a form of a continuation. So it was just accumulation there, but we had a bit of a footprint right there, which was interesting. At the same time, what we then saw was we created a base, we came up, we created a high, but we near missed this section. Very key point there, we missed that. We came down, created a second bottom, and then we came back up. But again, we took out the first near miss, but we left a gap to this point here. So this is where it gets a little bit more interesting, because when you see price action like this, it's quite repeatable. You've got your low, you had your near miss high here. The second point comes up, it either meets with it or it takes it out, but it doesn't take out the original point over there. So then at that point there, we essentially have two tops, two bottoms. Reduced risk entry could be set if you wanted to. I just thought in terms of the risk reward for this point here, it wasn't worth it. So then we're waiting for better confirmation. What then happened was we had the two bottoms, two tops, and eventually we created a third bottom there. So the base was made, and then we came back up. And then as we came back up, we took out that point and filled these gaps there. As those two gaps were filled, it basically did more than enough. I was very happy with the trade at that point there. Hey, don't you think the impulse was rough? What do you mean? Oh wait, hold on. Is a bit rough. I'll be honest with you, no. I'll be honest with you, I'll tell you why it's not, because if you go to the daily and you look at it, you know, yeah, it's broken above this, but you've got a bit of weight candle there. So when you've got a bit of heavy weight like that, especially at the close of a week, it's likely that we're probably going to retrace about 50% of that candle. So when you see it come back up on the 4 hour and you had this, would you really let that put you off? Because then if you know, that was just a bit of a retracement from the end of week close. If you do look at it, it just kind of sold off and then gave you continuation, and it's continuing. So when you really look at it, it's quite clean. It's a straight push away, continuation, accumulation in this area, and then you go, and then into a phase 1, phase 2, phase 3. So it's pretty decent for a trade. Oops. In terms of the trade itself, I missed the H1 entry. Let's have a little look. Haven't taken the 4 hour. Yeah, hold on, let me just quickly clear this off and I'll read that again. Yeah, so just going into the 1 hour quickly before we jump into that question. So basically what we have here is you can see it took out the gaps, and then as it took out the gaps, we then saw the evening star. Now, this was one where I said yesterday, you could crop this if you wanted to be more aggressive. There's nothing wrong with that, but I wanted to mitigate against a little bit more because at the time of day, I didn't take it bang on my session. So I just understood that New York session could come round. For whatever reason, we might push a bit higher into New York session, open, and then New York session sell. So for that reason, I could walk away and just go enjoy my day. And I wouldn't necessarily have to, you know, be worried about my trade or monitor it much. I probably looked at the charts maybe twice after I took this trade, maybe 3 times maximum, and I just carried on with my day. And I think that's the main purpose for me when I'm looking at stuff like this. So if you missed the H1 entry, would you have taken the 4 hour? Do you know what? I said this yesterday as well. There was nothing wrong with the 4 hour, but just because of the size of it and how the 4 hour closed, that's not my 4 hour confirmation candle. Even though it's done everything it kind of needs to in the area, I would still want to see a 4 hour candle. Like if I pull up another bit of price action on the 4 hour, I'll just find a random 4 hour structure. Let's say, okay, let's pick out this one here. I'll just invert the chart so it's a little bit visually better. So what we have here is, let's say we've got this bit of 4 hour price action, right? In terms of a 4 hour candle, I want to see something more in the lines of, you know, we've tapped into these areas and then we're getting a bit of a follow through. So at that point there, I've got either 50% of the retrace of that candle, I can get in there to there. So it's kind of more of the positioning of where the 4 hour candle was. But in the sense of, you know, just the candle itself, that candle there alone wasn't enough, but then the second one was a little bit more confirming. Okay, in this scenario, we didn't quite tap the highs as we wanted to. So that would have been your optimal entry because then you can negate against that small gap there, right? But in other scenarios, you'd have, you know, your 4 hour where it's like, and then it's here, and then as it's selling off and you've got something like that into that area, you'd have your retrace candles where, you know, they're pretty equal or the selling candle was a little bit better. Or even if I had that pin bar, you know, something like that would have been good. If it had quite a long wick, I wouldn't really want to mess with it. And what we're seeing right here on the current price action, if I go back to it, on the 4 hour, you can see that you basically had not the best sort of 4 hour candle there. If I take this bit off, you can see there the 4 hour candle there wasn't very nice. It had wicks on both sides. It was subjective. It could have done quite a lot. So if you were taking that, you'd have to add on extra protection as well. And that's basically the risk that comes with it. Just going to invert that back. What was the question? Hey, don't you think the impulse was rough? Yep. Yeah, I did crop. Yeah, nice. Yeah, I mean, like I said, you can crop this. It's just the reasoning why I didn't crop it was obviously I haven't taken a trade in a while, number one. So I don't want to just be jumping into a trade and take a quick loss and then realizing I could have mitigated against it, because I genuinely know how I would have mitigated against a quick loss there. I wasn't going in to just make huge profits. Do you know what? And then when you stop thinking like that, you end up winning more. I'm trying to get into this trade to win. I'm not trying to get in this trade to make 10% right now. I don't care if I walk away with 3%, 2%, even 1%, even, a small break even. The whole idea here is to just consistently win and to get into positions where I can consistently win. I'll tell you this as well, right? Something that can really, really help a lot of people. I mean, there was a scaling entry right here as well, just to point that out. You can see how you had the accumulation of all of this, you had the small continuation there, and you could have sold it. And then there was actually a refined entry in their London session where you could have taken advantage of that as well, where you would have missed the Asian session if you didn't know what you were looking for. I was kind of thinking about this yesterday, where I was like, this would be the sort of trade where you'd wait up in the evening, because what did I say about the sessions? If I pull up that again, then I might as well get sponsored by them. So we've got Lux Algo sessions here. What you can see here is your session opened. So New York session, we sold off, which we were exactly saying yesterday when we took the trade. We said, the likelihood is if we're down here and we get insurance entry and it's opening New York session, you're in for a great trade. So a refined entry in those areas for the insurance entry shaped up. So that would have solid been another decent trade here. You would have taken it, and I'll just remove my trade just to kind of mark it up where it's running right now. Yeah, it's roughly around about 2.8. which is decent. I'm happy with that. But let's look at that refined trade. So you've got this bit of liquidity there, and then you've kind of got this bit of steep price action there. You look at it on the 5 minute, just because you're high up in the run as well, and you can basically read it. And you're looking at the session as well. You're using the session to your advantage. What we're seeing over here is we had the 5 minute, New York's open over there. You'd take it like this. You'd put stops just above. You could even take 18 pips, and then you would have rode the wave. Thing is, in the sense that dropped off there for 3%, the odds are you'd want to be more aggressive with a trade like that, because you feel like you have a tight stop loss, so you'd be less lenient. If you had a larger stop loss, and let's say your stop now is only running 1.9, you don't care if it pulls back to break even, because 1.9 doesn't mean much to you. Now it's running around about 3%, you're going to feel the need to be more aggressive. This is all psychological things that you need to kind of correct, because the difference is your entry position isn't different, it's your stop loss. So why is your stop loss dictating where you're getting out of the market? We established on the higher time frame where our target zone truly was, and our target zones are down here and here, right? So there's no necessary need for me to get out in these areas. Even if there's a pullback, I know that it's normal. In fact, it's probably giving me another scaling opportunity. So reading off the next question, what do you think about the New Zealand yen trade? It's a bit risky. I think the New Zealand yen trade was amazing. The 4 hour, I'll check that out in a second, but I definitely think that, I was in between both of them. Truly, I didn't know which one I wanted to take yesterday. If you watch the video back, you'll see I was kind of like, New Zealand yen is almost too good to be true, but I'm gonna go with Euro yen. But yeah, I would have fully taken this. I would have taken this on the trade like that, and I would have been way happy with that, because I could see the structure for what it was, and then I would have played this, and yeah, it would have borderline been running around about 5-ish% or something. But again, I would have probably wanted to put a bit extra protection on it, so call it about 4.5, 4.7 roughly. I'd be out of the trade at this point anyway, around about 5%. So that trade for me would have been pretty much done. But what I do like about Euro Yen is it's still got some room to go. It's still got room to go. So if it does start following through and committing to the downside, I'm still in for a pretty decent trade, and I've survived the most of it. You can see here, so this was the scaling opportunity 1. So, there's many ways we could have taken this. This is the second one. That one, if you left it open, you borderline, you would have been 8%. Still pretty decent. Then after that, I'll remove this one off. You then had the next piece of structure, which was here, which was right there, this bit here, right? Why is that a good trade? Not because of the makeup of the actual structure, but it's because of the positioning. But then again, you can see into Sydney session over here, we opened, we corrected up, we then completed on the structure after swaps, we then shaped up. I believe Tokyo session opened during the correction as it was basically moving towards its target zone, and then you basically had your entry there. I mean, the entry was clean as well. If I zoom in a bit more, I think it's good. So, even if you took it on that candle, the next candle, on the break, let's say you took it on the break for like the latest one in that scenario, you could have taken it like this, and then you'd still be in the trade, and you would have optimally run around 5%. I would have been out. I would have been out for a quick in and out trade, 5%. Done. I would have understood that's a short-term trade for me, even though that has potential to probably drop off and become some sort of mega 15-14% trade. I'm quite happy with a quick 5% win in the morning there, and then reassess later on. Again, that was something you would have to have planned for. It's not something that you'd wake up randomly in the middle of the night to take the trade. It would have been something that you understood that prior to here, but prior to swaps, prices correcting in this area, the likelihood is we could sell off, and then we could push back up, and then Tokyo session, which is Asia session, opens, and you would have taken the trade. And that's something you can do when you plan for, if it's out of your session, then okay, you know what? I can see it's roughly around about 7, 8 o'clock UK. Price is correcting sideways. The likelihood is if this is going to commit, because it's already done the high time frame stuff, it's probably going to do it overnight. Let me take a step back and take a break, and then let me wait for Asian session and see if I can take advantage of a trade there. And then you can do that. And then you have to realize that because you did that, then you might need to sleep a bit more to get some hours in for your sleep. And then you might have to compromise London session open, and then you trade for New York session, something like that, so you protect the mindset. And there was one more trade. If that wasn't in your time zone, and for whatever reason you just said, look, my rule state, I don't trade Asian session because it's out of my time zone. So then you would have looked for London session, and over here you had the exact same thing. So you see how we have this larger structure here, and then you have the small little structure there. You basically have the exact same thing. You've got your larger structure there, you've got your small structure there. So then you could have taken the same trade here. It would have been a little bit more risky because we're quite far in the run, but that's basically your last entry, and you would have basically taken it here. I would have said a reduced risk entry personally. It's not the best trade in the world. If you could get risk, it would have been great. But a trade roughly around about here would have been perfect. You would have set your stops there. You would have played it straight into London session, and then that would have dropped off for roughly around about 4-ish%. As it pulled back, you probably would have taken the 2.5, borderline 2.5, and then you would have walked away with that, and you would have been like, cool, I'm happy with that trade. So that basically is it for the euro yen. I mean, look, like I said, I took just one trade. If I just pull it up here, okay, so I'm going to take a screenshot and put it on TradingView because I don't even know how to do that. Let me see. If I go dot triple dots, can I paste on here? Let me just quickly check something. Yeah, so if I click on this and I put the shield on, what does that do? Oh, okay, cool. And then if no, I can't even do that. To be honest, I don't even know how that works. To be honest, I'm still trying to figure this out. If I put here, shield, screensaver, video broadcast, here we go. Yeah, sorry guys, I'm just trying to figure out how I swap over so you can see my trading view, but I'll be honest with you, it's not an easy fix. Oh, what have I done? Have I entered the stream? No, I hope I haven't. No, it's good. It's good. It's still there. Yeah, to be honest, I'm just gonna leave it as that. But yeah, essentially, you pretty much know what the trade is. I'll keep posting it on the Instagram anyway as it progresses. Oh. So let's read some of these comments. So what did you think about the New Zealand yen trade? Yeah, so the 4 hour, let's have a quick look at the 4 hour on New Zealand yen. I'm just going to take off this sessions. For some reason it's going pretty slow now. What have I done? Hope I haven't messed anything up on the settings, but it is going pretty slow. Yeah, the 4 hour is solid, man. Not sure if I already covered it, but the 1 hour, sorry, is solid. The 4 hour. Have a little look. So he says, I don't really like the structure in that. Hey Sean, how's it going? Yeah, man, I like your New Zealand yen as well. To be honest, if I didn't have EJ, 100%, man, I would love to get involved on EN and NJ. Again, it's one of those ones where I looked at it and I was just kind of happy to be like, you know what, I'll stay out. I'll let it do its thing. It's performing well. It's doing everything it needs to do. I don't need to mess about with that. Oh, okay, cool. So just suddenly decided to start working. Fair enough. Oh, okay, cool. So just suddenly decided to start working. Fair enough. Oh, okay, cool. So just wicked. All right, cool. So yeah, we'll carry on as we were. So let's read through these questions. So it says, I did not really like the structure on that insurance entry. Yeah, I'll be honest with you as well. From being zoomed in on this, it doesn't look that great. But when you look at it from the 4 hour, for example, and you look at the sequence, so I'll take this off. If you look at the sequence, there's nothing really wrong with that. You know, you've tapped into this. You've done all you need to do there. You've had a strong push away. You had a bit of a pullback because, as we said, with that large candle, it does make sense for it to pull back. After it pulled back, you had the accumulation here, and then the completion of that, and it sold off. So you look at it in the same way here. You had the same thing, strong push away, retest, sold off, full advantage of that. Same situation, came here, accumulation, went to the buy, created a gap, came back down, took out the low, eventually came up, took out the high, sold off, and then this makes sense to come back to the downside. So the psychology of it's all there. It's actually a pretty decent thought process there. I mean, I wouldn't be surprised if NJ has a bit more room to go, because we looked at this last week, or this week, I'm pretty sure, and we were saying, like, you know, this is still one large piece of its own, so it's not really a fully established range. But then even when you zoom out a bit more and you look at it, we are still on our way to the upside, so we might get a short into one of these areas here before we go long, and that's the interesting thing about it. So what was the next one? Didn't take USD Swiss yesterday purely because of EJ. Yeah, I mean, when we ended the live yesterday, I was looking at these pairs, the USD related pairs. If I just go to currencies and we scroll down, look at USD Swiss. I'll be honest with you, USD Swiss, I was waiting for more, but we did have that structure there, the one that we drew up here. We had this structure. It's just I wanted to see that kind of push higher to give me something a bit larger. We didn't quite get that. We did just sell off. We didn't get an insurance entry either. So in the end, it was the structure that we thought it was. It just, again, I'm happy to not take a profit on something like that because of the overall sequence. That was the main one why I wouldn't even be bothered with this trade much, is look how we got there. We came in correctively. We then, came out with a channel and then this expanded, and now it's kind of a bit like this. So this is going to come down here to then eventually come up anyway. If that's the case, then the question I have is this then going to be something like that? And then we get a near miss over here. We do the same thing again. We come down, we come up, and then we tap into those areas and we sell. And then the whole psychology is there, right? And then this becomes the beginning of a larger structure. Because look, same psychology over here. Then we did this. The same thing could be happening in this area here, just more correctively. So that was kind of just the higher time frame thought process on it. But then, yeah, sure. If we're looking at the intraday trade, then we go to the hourly. There was something to work with. After we cleared this, after price cleared this, and then you had that sort of V shape here, you could have arguably taken a trade in there. If I go down to the 5 now, and we look at that a bit closer, you can kind of make up what's happening here. Again, time of day was what? New York session, Thursday. Yeah, well, now we're Friday, we're pretty much selling off. So yeah, I would let it go now. Like you said, it's not worth it. What was that? So I was in EJ. So question for you is, why did you get out of EJ? Because I'm just curious. USD CAD. Nothing wrong with getting out. Obviously, this can pull back and whatnot. But I'm just curious to why you did get out, and where did you get out? Did you get out? Let's say this is level 1. Did you get out here, like in these areas? Level 2. And just mark it on. Tell me if it's like within the second point or the first point, or worst case scenario, the third point here. Let's just check out this USD CAD trade. So USD CAD, check USD CAD on the 1 time frame. I'm seeing a 3 touch, it might sell off. Yeah, I see what you're seeing, but I'm waiting. This is what we said yesterday. Look, all of this area is high risk, right? Because that can just do a lot of craziness in this area. So if you really can, and if you're trying to pass an assessment, you want to try avoid those areas right now. Not that you can't make money in them, you can make money in them. But the question I have for you is, do you want to make money in the high risk areas? Do you want to make risk in the higher low risk areas? Or, and this one was really interesting because it was like, this whole area here would be high risk. But within this, don't get me wrong, as soon as we clear that and we get continuation here into the next point, that little point there becomes low risk, right? But the overall high time frame positioning is high risk. So then this particular trade within the high risk is low risk. And then here, that trade there, because it's still high up in the run, it's still a little bit higher risk, but it's higher low risk. As we start clearing that, and we've had a pretty good sequence, this trade here to here, depending on how you can get positioned, you can make it low risk. So you can always find a low risk trade within a high risk area, but I would ideally want to be taking as many trading opportunities within a higher low risk area or a lower risk area. But it doesn't mean I wouldn't take a high risk trade. It just means that if I'm taking a high risk trade, I want to mitigate as much as possible, take off as much risk as possible, and I want to wait for something where it's giving me a lot more clarity, not something that's squeezing and is testing like multiple times. I want something that, meets my AA setup, for example, right? And then, I've got a bit of clarity where I've got section 1, section 2, 1, 2, 3, and then I can take advantage of that sequence. And then that's how I can make it something that I can work with and I can make profit from it. What's this? So it says, holding yen pairs over the weekend won't be a good idea considering the gap last week. Yeah, I mean, don't get me wrong. It's, holding over the weekend is a little bit tricky because, you said the gap in, but at the same time, you can sometimes have a gap coming back down as well. It does work both ways. It's just, I don't see why I would want to get out of this position just yet, even with the whole gapping idea. But you're right. I mean, when the market starts to gap like this, we don't know how. There's a lot of uncertainty around the market on the weekend, so it's better to close off for the week if you're on prop firms and stuff than holding on hope. If you're considerably in profit and you could take, let's say, 2% slippage, fair enough, then hold through it. Or if you're running like 4%, the odds are something like this is a little bit irregular. It's unlikely we're going to see movement like this again. We're not going to see another big gap this week, and then the week after we see another big gap. Like, that's not the sort of commonality we see within this instrument. This was just kind of an anomaly that we saw throughout the whole entire markets. We saw a lot of liquidity getting moved in the last minutes towards the end of the day, and then it gapped and on the open. So we still have a lot of time in the day. If this does start to move and it makes its way down here by Friday close, you've got a clear message from the market. You don't need to be getting out for the weekend in the thoughts that what if it gaps and comes all the way back up here. It's not the case. I would say at that point though, you can just manage a little bit more aggressively. You can put stops here, lock in 3-4% or whatever it is at the time, 1%, 2%, and then just let it play out. And then, market opens next morning, Monday, and then Tuesday it's all the way down here. And then you're thinking, yeah, I should have held on to that trade, because I look at sequence. We pushed down, we had continuation, we cleared the low, we had another continuation, pushed down, we then had another entry, we had another trade there, we had there, positioning was extremely good there, then we had another trade here, another trade in there, multiple trades, then we had a trade here, let's say, and then we had another trade there, trades all the way down here, and you're like adding all of these up, and you're like, that's 10, that's 13, that's 6, that's 7, that's 12, and next thing you know, you would have had like 32% on the way down. And then you kind of got out for, let's say, 3% here. So then you'd be kicking yourself in the foot later thinking, damn, perhaps maybe I need to learn to hold my trades longer. And, it comes into those ones. So like I said, if you're on prop firm, then it's better for you to close it off and not put your capital at risk, put your prop firm assessment at risk. But if you're in profit, you're not in a situation where taking a loss is going to really mess you about for next week. Because you want to protect your mindset, first of all. If you can protect your mindset, your week will be solid. So yeah, that's just basically it. Let me just clear that off. So we're looking at AN for next week. What was this? Holding the yen pairs over the weekend would be a good idea. Yep, absolutely. Was it on the crop? Wait, hold on. Was it on the crop? It was running close to 4, out for 2. Oh, I see. Okay. Yeah, you see this. This is something that I as well experienced sometimes earlier on in my trading journey. And I'm saying like a year ago, most likely. I would take a trade. I would get the best entry, better than anyone else I knew, but I would mismanage it and walk away with the least amount of profit out of all of them. A lot of the time, or sometimes it's not all the time the case, but that was a commonality that I noticed. It's also that market direction. When you get too zoomed in, you need to get used to going back on the time frames. You kind of consider it like this, right? You stay zoomed out to see the bigger picture. You then zoom in to see the details. But then when you see the details and you understand what you're looking at, you zoom back out, and then you stay zoomed out. You're zooming out at that, let's say, your central time frame, which for me, a lot of people use the 1 hour, I'd say 4 hour central time frame is perfect. The 4 hour as a central time frame is really good because you can just get a great perspective on the overall market direction. The reason why I'm able to not have any emotional decisions in terms of the management of this particular trade is because I understand the bigger picture. I understand the probabilities of us filling this section here or even coming down and filling the gap. And that's the gameplay that I've taken when taking this trade. So I got into this trade knowing exactly where I want to exit and how I'm looking to manage this trade. So anything in between, it doesn't really affect me as much, because I don't care. I really don't care if I take a break even or 1%, or even worst case scenario, a loss. I could repeat the process over and over again and I can make money. And that's the one thing that you have to come to a realization as well, that if you know your plan and you know how you're getting into the market and how you're managing it, then you know that the average winner you have is genuinely a 3 or 4 to 1. Then you kind of know at that point there, probabilities in that way is on your side. And it's not just understanding that probabilities, I can keep taking trades and the probability I'll probably make money. That's not the case. It's probabilities in the sense of you understand your strategy, you understand which trades in comparison to the other trades you're taking has a high strike rate. So for example, like I mentioned, the high risk, low risk, etc. areas, the higher low risk areas, I know that there's some market scenarios where I could take a high risk trade and I could still make a decent amount of profit, and it's likely to go in my direction, mainly because the trade is in a low risk area and it's got more reason to commit. So again, it comes into what I was saying yesterday with the DAX as well, where we have that different market cycles. In a market cycle like this, where it's completed on its phase 1, phase 2, phase 3, over in this market cycle here, I have a higher probability of making money. So I just wanted to point that bit out. Let's have a little look. So let's move on from Euro Yen, because that one it's done. Let's see. Holding yen pairs over the weekend, we read that. AN next week, may get a good trade. I'll be honest with you, I do think AN is going to come in with the goods. I definitely think it's going to come in the goods. Yep. I think someone messaged me about this as well. In drawdown 5%. Yeah, so just before I jump into AN, just want to kind of talk about that drawdown, right? You might be in 4%, 5%, 6%, whatever it might be, right? But the case is nothing should change in terms of your trades, your quality of trades. You don't settle for less. Like for example, I was looking to get these, I don't know if you like shoes, but I was looking at Nike Dunk Lows, and I was quite adamant on buying brown ones because I have a few brown outfits and I like the color brown. So I was like, you know what, I want to get some brown Dunk Lows. And then there was like other colors popping up, and I was like, oh, this one looks good. It's like some dark blue and stuff. And then my wife said, why are you going to settle for less? And then it kind of just made me think as well, like, yeah, no, for sure, in the moment, something might look appealing, but it's not what you really want, because you're still going to want those brown Dunk Lows, right? The shoes, by the way, if anyone didn't know. And essentially that's what's happening a lot of the time in the markets, is you start settling for less. So if you start getting a bit more strategic now and you're in -5, right? Just settle for your go-to setups, the ones that you have extremely high strike rate on potentially whatever time frame, and then you basically just take those, and then you get positioned in, like, say your next 5 trades are only this trade setup. The odds are, on the average of all of these trades, from here to here, you've got, let's say, 3.6%, right? Not great, but if you took 5 of those, right? So let's just mark up 1, 2, 3, 4, 5, and let's say the first one was a loss, right? So now you're at -6. The second one was a loss, you're now at -7, but you're still taking them. The next one's a win, right? So that's a win. And then what happens is it's 3.6. So now you go from -7 to 2.5, right? You're now at 2.5, -2.5. The next one's a loss for whatever reason, right? You're now at 3.5. The next one's a win. You're now at break even, right? Or even +1, 0.1. You see how quickly things can change. So bear that in mind, that it's less about just taking loads of random trades, because a lot of the time when people send me trades, they always send me so many different types of trades. Like when I look back through our chats and I look at all their screenshots, they've sent me like, this trade in various different areas. Then they've sent me, you know, a trade like this. Again, in many different areas. And, you know, that could be a high value area one time. It could be in the middle of a structure. It could be positioned here, could be positioned here, could be positioned down here, could be positioned here. Again, it's like you're trading all over the market. So you're all over the market and your results are displaying the way that you're acting. Whereas if you notice as a commonality, a lot of the time, professional traders, they like to, like, let's say that this is your overall structure, right? And it's doing that. A lot of people, they may only want to get positioned there, like I just mentioned, right? And then they let the probabilities play out from this sequence. As I mentioned, probably in almost every video in the past, you know, month or two, I basically just mentioned I'm always taking trades in that sequence. I'm forgetting everything else there. I'm just waiting for this to complete. Once this structure is completed and it's given me, you know, the structure that I need, this is very messy, I will then basically take advantage of that structure there. That's the one thing that I use to play my edge, because I know that the dominant market direction is now in my favor, and the probability is it's probably going to commit because it's supported by a lot more factors. Let's read these comments. So, running close, yep. GU is still developing. Yeah, sorry, I never actually covered AN. Just to kind of look at this, I definitely think that if we get an insurance entry here, there's two ways I'm going to look at this. We either push up now, we get a trade here, and that pushes up. We can manage it into that point there, and then potentially we carry on going. That'll be solid. I'll be very happy with this trade. Is probably my lower risk one. This one is still a little bit high low risk, but it's still good. I'll be happy with either of those because we've kind of created a double bottom there as well. If we sell off and we continue selling off, then this would be the next area I look at for it to potentially turn around. And then we'll basically see what happens. But I would want to see a strong impulse correction and then probably a second correction to mitigate against this then developing into further continuation to the downside. Right. So that's basically that. Let's see, GU. Let's have a little look at GU. Yeah. It's exactly what we're looking for. I think actually good spot. There is probably a trade in this shaping up as we speak. Let's have a little look. So we had the first trade down here. We've broken this. We've still got gaps to the high. Let's make that a little bit cleaner. So we'll put this up here and we'll look at it. So there's a gap over here, which is great in terms of psychology. Then we're now creating continuation. I think it needs time. Probably going to be a next week trade, if I'm honest. I would probably see this probably take its time, come back up, and then eventually come here, and then we go. And then that's your base, that's your gap, that's your structure into it, that's your entry criteria area. Perhaps maybe if you're lucky, you get an insurance entry here. That's your second entry, and then you're basically taking the trade up there. And that's the trade that you want to be waiting for. You can see how I'm still on the 1 hour, so there is room to potentially refine it on the 15. But again, may not be necessary. You could still take it on the 1. Trade is going to be good. Bro, are you close to reach 7 figures in funding? You know what, right? I actually think I'm going to be aiming for 9 figures. No, really. Yeah, no, I'm not that far off actually. I've diversified my investments as well, so what I've done is I've got trading capital that I've got on the side, but the main thing that I've been doing is I've been putting it into ETFs and diversifying the money into other things. So for example, I'm trying to get my money to work for me. So this year I've made around about 26 to 28% on my portfolio of investments outside of CFD trading, which is contract for difference, what we trade with prop firms and stuff. 26% on all that money, and I'm basically just adding into that. So I've got that as a residual income, which is compounding by itself. That I basically spread that across the S&P 500 ETF, and what that's doing now is I've got that compounding over the course of the next 8 years. but I'm anticipating within the next 6 to 8 years, that amount of money is going to compound into roughly around about £500,000 to circa around about 600-700k pounds. So as a side investment of having that on the side while I'm doing all of this, that's pretty good, because that's making me money on the side. So that's something that also does change a lot with my trading, because when you've kind of got money coming to you in the background, you're not so keen on jumping in every single trade. You don't feel like you have the need to, because at the same time, like, I can wait patiently. For a trade like this to shape up. You know, it's at the low, it's broken the low, it's then shaped up, and I can see something like that and be like, yeah, that's something I'll take, and then I'll add that to my portfolio, and I'll take it, and then, you know, just something like that as an example. But when I didn't have other investments and I wasn't trading, putting money into ETFs and other things, it was a little bit tricky. Because I always felt this urge that I need to be making money. I haven't made anything this year. My money's going down. So something that really helped me was where I was able to put money aside, and then as a yearly spending, for example, I'll just give you a rough figure. Let's say I was spending around about 10k a year, 10k pounds. So that was my yearly spending. So then what I would do is I would put roughly around about, so if I do the maths, to make that 10k, you'd roughly need it this year, investing at the right time in S&P 500, so April, because it works tax year to tax year for an ISA. That's the most important thing, right? If you're from the UK, you get ISA advantage, which basically means that you can put in up to 20k tax-free into your S&P 500 ISA, or whatever ISA you want to put it into. It's tax-free, and then when you make profits, you can take it out tax-free, so there's no capital gains tax. In the UK, the capital gains tax is 26%. So what that basically means for a lot of you guys is, if you put some money aside, that will compound anyway at roughly around about 17% on average over a 5-year period. So for me, I've already made around about 26% on investment, which covered me for my yearly bills. So then at the same time, it kind of was like, okay, I don't need to rush into anything. I can work more on my education at the same time now. Obviously, a lot of people are saying, well, I don't have 40k, I don't have 50k. Well, there's a lot of ways you can acquire that capital and make that capital work for you. But at the same time, you don't need it. You know, what I'm demonstrating here is basically the mindset of somebody who isn't in a immediate rush. So I'm not looking to jump into every ordinary trade. So I just want to kind of point that out, that if you shift your mindset to somebody who's not just trying to make money today, but somebody who's trying to make money for a lifetime, but they're not trying to do it with sitting by the charts for 10, 15, 20 hours, that's that. You know, like after these YouTube lives, I'm chilling. Like I don't really have much else. Like I might look at the charts occasionally over here and there if I get an alert, but there's nothing for me to really be chasing, because I'm only taking a trade, London session, New York session, and I'm done. So I just wanted to kind of point that out. You can do the same. You could literally mimic and copy every single thing I'm doing, not in terms of processes, and well, not in terms of routine, sorry, because you know, everyone's routine is going to shift and change, and everyone has a different day ahead of them. But in terms of like processes, the way I'm approaching the charts, thinking, acting, and what I'm waiting for, if you implemented the same things and you studied the things that I'm pointing out, you would probably see the same level of success and growth. So to answer that question, to reach 7 figures in funding, I'm really at the start of my journey. I can't really, let me just quickly check if I can, I'm trying to see how I can paste on the tablet, if I can paste an image on here, because if I can, I'd be able to share that with you guys, and then you can see what I'm looking at. It's all right, it doesn't matter, I'll figure out. So yeah, so basically, what have we got here? Layers. Oh, actually, now I remember, I can go here, go tools. It's in here somewhere. Visuals, stickers, icons, annotations, image. There we go, choose from your images. Yeah, don't mind that funny little photo. It's too large, cannot be posted. All right, fine. Anyway, that was it. So yeah, there was a thing there. I'll show you next time anyway, it doesn't really matter. It was a goofy photo there. It's basically changing my wife's, I wish I could show you. Got a funny photo of my dog yawning, but mid-yawn where her tongue's out and she looks like Scooby-Doo. Anyway, let me ask these. How many trades should you have opened at the time? All right, let me read that again. Let me ask these. How many trades should you have opened at the time? I'm not quite understanding that. Am I reading it wrong? How many trades should you have opened at the time? Could you rephrase that question for me, please? Funny facts, Sefer. Ankit, what are your thoughts on GC? Looking to sell if it forms anything below 188.00 GC. Let's have a little look. GC. All right, so GC's not looking too bad either, man. I just want to mitigate against some risk. I mean, obviously the one I've drawn here is pretty far down. It's really confirmed at that point, but I think the sequence you're looking at here is good. If you're looking at shorts, I think solid, man. Your attention's in the right area, but you want to be waiting. Max trades that can be opened. Okay, that depends on you, to be honest. I thought I could manage maybe around about 2-3 trades, and I have done before. Don't get me wrong. If you're looking at one pair, let's use GC as an example, right? Because then I can hit two birds with one stone. So Ankit, I would wait for price to come back and trade back down in these areas, maybe even clear that section there. But ideally, if we're trading back in these areas here, and we're getting something a bit like this into session, you can then take a trade like that short. Now, let's say, for example, Zephyr, the real question I have for you is risk opened. Okay. This also depends on your prop firm account, but usually they only allow you to have 1% per trade. You need to be conscious about the pair you're trading and slippage. Now, if we use yen pairs as an example where we had that huge gap, you could have been scaled in for like 5 shorts down here, and then you had the huge gap and it came up here. You're not going to be so happy with that. You're going to be taking like 5% slippage, 6%. In fact, you meet your maximum drawdown for the day limit, your account's done. You've lost your account based on that, and you can't anticipate that. So that's one of the things about, you can be on a 7-figure account and something like that gap happens, and boom, you've lost that account, so you don't have any protection in that light. So it's something you have to be conscious and careful of. That's why I truly believe being a low risk trader is much more beneficial than being a high risk trader. Somebody who's actually, if they're saying 5% maximum drawdown or 10%, then you don't want to have a maximum exposure of more than 2.5% on the table, right? If your maximum drawdown is 5%, you don't want to have maximum exposure of more than 2%, really, right? But if you're locking in profits, it's different. So for example, let's say I took a trade here, and over here I locked in +1, right? So I've got +1 here. Then I've taken another trade here, and I've locked in over here +3, okay? At that point there, I can keep taking more trades. Even though I've got 2% risk on the table, and I say I'm not going to take more than 2%, if I get another trade in here, and I know I've got 3% locked in there, right? And I take another trade in here, let's say a reduced risk entry I take there, and now that's down here somewhere, I'm basically then looking at, let's say plus, for argument's sake, 6%, right? So I've scaled in multiple times, but I've got maximum risk exposure originally at -1, -1, -1, right? So that's 3% exposure. But because I'm locking in, this one has now, let's say I've left them at where they are. my risk exposure is actually +1, so it doesn't matter. Even if it comes back up, it's fine. My risk exposure here is +3. So technically, even if price comes back up here, and let's say I take slippage and it takes me out for -2%, I'm actually still at +1. So obviously we're not anticipating slippage like that unless we're trading like EN or something crazy. So it's all about stacking and scaling into those sort of trades. But you want to take risk off the table before you add risk. That's the main thing you want to take from this. Is every time I looked at taking another trade, I took it. It wasn't like we tapped into the value area here, we then got first trade, I took the risk entry there, but I still got risk on the table. Then I took another trade. Oh, sorry guys, I've just got someone at the door. One second. Someone at the door. Just give me 1 second, guys. No, I genuinely don't know who it was. So I was just kind of wondering who was at the door. Cool, no worries. So basically, just kind of continuing with this, you want to take the risk off the table before you kind of continue in the position. I think if you're jumping into a position and you've still got risk on the table, especially on another pair, let's say you look at two pairs shaping up at the same time, rather than going full risk on both of them, you want to half your risk. So you want to always try have maximum 1% risk exposure on the table, because in a worst case scenario you can survive whatever terrible things happen. So you can split 0.25 across 4 trades and you can have it there, but then you have to remember your attention is going to be split across 4 pairs. So at that point there, you're not going to have your full attention and focus on all your pairs. You're going to be split across 4 things. So I'll just show you an example actually, because I've done something like this before where, for example, I've got so many messy pairs right now. Just going to pull it up here. Let's say I've got 3 charts, right? And this one, I'm taking this particular setup. This one, I'm taking, let's say, a bit more of an expanding, right? And that's my trade setup. And then over here, I'm taking something a little bit more different. Right, I've got something like that, and then I've got a trade in there. So then when you look at it in that sense, you've got to then ask yourself, you're managing 3 different, completely different types of trades. You're not managing the same trade 3 times. So you're going to have to then think a lot more than basically just how you would think if you had the same setup. Imagine that I was just taking this trade, a 1, 2, 3, a 1, 2, 3 here, and a 1, 2, 3 like this, and I had the same setup across all of them. They'd be a lot easier for me to manage because I can apply the same sort of methodology depending on the market environment of where it's come from, right? So that's what I say to a lot of people. You're more likely to make more money when you're following this sort of process opposed to taking everything here. If you start taking everything, you're going to really struggle. The V shape, I don't think there's much wrong with it. Like, we've always been kind of looking at V shapes. So this is a V shape over here, where you've basically got your consolidation there, price then sold off, came back sharp, and then sold off. That's your V shape there. It's just about knowing about sequence as well. Like, when you understand where the V shape is positioned, it's kind of a bit more interesting. Like here, look, you've got a V shape there. Again, you know, this one here, you kind of had a V shape, kind of extended. Here, you've got a bit of a V shape as well. They come everywhere, but I don't take the V shape as a risk entry at all times. Usually what I'll do is I'll wait and I'll take that trade there. I'll wait, I'll take the trade in there. I'll wait, take the insurance entry. You know, and I find those to be a lot more easier for me than trying to catch in the V shape there. Because when you think about a V shape, usually what it's doing is coming down and coming back sharp to tap into an area of liquidity. But then if I'm taking a risk entry here, what you've seen multiple times is it then pushes up higher and then sells off. How many times have you taken a trade like this where you've had the consolidation, price came up, came here, started stalling in that area there, but then it pushed up against you and then sold off later? It's a perfect example of what I'm showing you right now. All right, let me read some of these questions. So max risk opened, I would say personally 0.25% per trade. Maximum risk exposure on the account 1.5%. But if you're not consistent, 1% max risk exposure on the account. And the highest I would probably say go with your account's risk, from my opinion, is probably 0.25% as you're building consistency, and then eventually get to 0.5%, but don't change it. You know, and I'll show you the quick maths as well, right? If you do 0.25%, right, and you times that by, I believe it's 13, you get 10%. No, wait, no, sorry, that's incorrect. If I do, what's it called, 10 divided by 0.25, yeah, you're looking at 40 trades, right? I mean, 40%. But then if you look at it as your average winner is a 3-to-1, right? Is a 3-to-1, then it's about 13 trades. So if you do 40 divided by 3, yeah, you're looking at 13.3. So then that's the answer there. You're looking at 13 trades at a 3-to-1. So how do I know I'm going to get into a 3-to-1? Well, it's very simple. You've got your structures, for example, that you're trading, which are, as I just showed you, you've got this, where you've got your, let's say your consolidation here, came down, came up, near missed, came back down, created bottom, footprint, gap, came back up, missed again, created a third bottom, let's say it does that, and it comes back up. Now it fills it and sells. That's your go-to. And then from here to here, I want to then establish, can I get a 3-to-1? That's one trade I then add under my belt. What did we get on EJ? We got the same thing, right? This is the structure, basically. Where is it, EJ? There's your 3-to-1 that you add into your data sample size, right? You then walk away over here with, you know, whatever trade it was there, into the low there, you've got 3-to-1. However you've taken it, you could, maybe you didn't get a 3-to-1, maybe you got 2, but whatever it was, over here, you know, you've taken it here, you got 4-to-1. You add that into your sample size, that adds up into your numbers, and then you keep taking those, and then you're eventually making money. So something to just bear in mind. Let's see. I kind of have a rule to have 1%, not more, opened, which means that a trade that isn't in profit or break even. Yeah, I mean, it's a good rule. It's a very good rule. I think, you know, these sort of rules are what's going to protect you long term. But you can even have a rule where it's like, I only have one trade open at a time. So it prevents you from over trading. But then that doesn't mean that you close your trade to get into another trade and things like that. You don't bend your rules. You literally say, if I take a trade, I set it and leave it, and that's that. It's a win or loss, and then, or break even, and I deal with it from there, and then I learn from those datas. And then you don't close it, and then that's it. You can't get into any other trades. So then that forces you to be much better at your forecasting. It forces you much better to make decisions and stick with them and so forth. If in profit or break even, then you can take another. Yeah, I think, you know, I think it depends. It depends. Like, you have to ask yourself mentally as well. Like, if you have a good routine and you have good control over what your days kind of look like, then you ask yourself, like, will I be able to manage 2 trades? Or would it be more effective for me to focus my full attention into one trade? Because think about if I took another trade after this one and my attention was all over the place, I wouldn't have analyzed this one properly, and then the scaling opportunity in there as well. Like, I would have missed those 2 trades. I mean, don't get me wrong, I didn't take them, but I was aware of them. It's just, at the same time, if I put my full focus and attention now into this sequence and this run, because I've got that top down here all the way back to down there, then I could make more money just fully focusing in this one area, and I don't need to keep swapping through charts all my attention is basically in this run, and then I can move on to the next instrument or whatever later. How do you go through a drawdown in a 5% using? Okay, so you do it slowly. You gradually, slowly get yourself out of there. You say, okay, look, I don't care however long it takes. It takes me 1 month, 2 months, 3 months. I'm gonna now stick to 0.25 because let's say my max drawdown is 10%. Okay, so now it's basically I'm right in the middle. This is where I am. This is where I don't want to be, right? And then this is where I want to get to, 0. Now I need to break it down incrementally. So in order for me to get from minus 5 to 0, so you're going to go from -5 to -4 to -3, -2, -1, and then 0. Okay, the goal is 0. How am I going to get to 0? Well, the question is not from getting from -5 straight to 0. That's not how it works. What we're going to do is we're going to get to -4, and then from -4 we'll get to -3, and then -2, and then -1, right? And we'll be aggressive with it, and we'll get ourselves out of it, but we're going to do it in a very smart way and less risky. So what I'll be doing in that scenario is I will know that I'm trading 0.25, right? I'm looking to get positioned in my go-to high probability setups, which ideally, you know, like I said, could potentially be, you know, whatever, try 1, 2, 3s, 2 touches, whatever you take. I'm then trying to get positioned here to here in that sequence there, that final little leg here. I want to get involved in there, and I want to be looking to make at least a 4-to-1, ideally, right? Now, if I make a 3-to-1, I make a 2-to-1, fine, it's still good. It adds into it. But if I make a 4-to-1, then I go to my next point. So then I'm no longer at -5, I'm now at -4. And the good thing is, it might continue going. But if it does, it doesn't matter. My goal is to get to -4. Now I'm at -4, that's my weekly goal. I just need to get to -4, but I need to do it sustainably. If I take a loss, I only go to -5.25. If I take another loss, I go to -5.5. If I take another loss, I go to -5.75. If I take another loss, I go to -6, right? I have to take 4 losses to go -1 backwards. I have to take 1 win to go forward 1 point, or even 2. Sometimes that could just jump to 2 because of market conditions. Could even go 3, right? But we're not trying to go 2 and 3 and 4. We're just trying to go 1 to this point. Remember, 4 losses takes you 1 step back. 1 win takes you 1 or 2 steps forward. That's how you want to be looking at it, right? But the only way you can do it is by positioning yourself correctly in the right area, and you're being patient enough to wait for those structures to develop so you can take advantage of those 3, 4-to-1s. If back at 3 or 2, then 0.5%. Nah, forget that, man. Listen, if you can get from -5 to 0 with 0.25%, you can get from 0 to 10% with 0.25%. Doesn't really even matter at that point. I could give you even if the thing is, I think as well, you have to realize sometimes when you put 0.5% or 1% risk, it's not even just now about the you know, moving forward quickly and stuff. It's also when you're seeing those profits run, how's that affecting you psychologically? You know that, oh, okay, I've got -0.5 on the line, I'm running 2%, should I just take it, right? Of course you're going to want to just take it, which is nothing wrong with that, but then you're taking it based on what, emotions or structure or strategy? What I've shown you here, going from -5 to 4 to 3 to 2 to 1, that is strategy. You've put something in place that you're being strict about, and you're saying aggressively, I'm going to get from -5 to -4 this week. Good. Then I'm going to go from -4 to -3. In a worst case scenario, you go from -5 to -5.5. You know what I mean? You lose 2 trades, but you win a trade, and now suddenly you're back at 4. So you can jump further than you can fall backwards, essentially, and you can do that by being patient. Can you show us some of the reduced risk entries? I have some trouble specifically with entry candle. Listen, reduced risk entry depends what type of trading structure you're trading, but if we look at a reduced risk entry, it's very simple. I'll be honest with you. A reduced risk entry is this. So we're going to use the same trading setup I just showed you. We have the consolidation here. Price comes down, it pushes up. You've got the footprint there. You've got a gap here. Price then comes down, creates a base. You've then got two bottoms. You've got one top there. You've got two tops essentially. Price comes there, fails again. But let's just say it wicks to it, doesn't take it out, comes down. Now you've got three bottoms. Sometimes you don't get three, sometimes you get two. Now you've come back up and you've come up and you've tapped into this area. So what do you have here? You have your 1, you have your 2, ideally in this section here, and you have your 3 there, okay? Now, more importantly, internally, you also have a 1, 2, 3 leading into it. So you have a 1, 2, 3, okay? You've established that. So this is a large structure. We're looking at this, and this is, let's say, on the 4 hour, right? That's a H4 trade. You're then looking at, you know, a confirmation. Let's say it just sold off and you missed it. You were sleeping and you were like, oh no, I've missed it. And then let's say you've got a trade in here now, right? Shaping up there. You're then looking at this like, oh man, I want to take this for a risk entry, but I've missed it. Now I want to take it as a reduced risk. There's many ways you can use reduced risk to help you. But this is one scenario. So this is basically what a reduced risk is for anyone who doesn't know. You're basically just setting it under the structure, and then you're basically getting tagged in as it commits, right? In some scenarios, I'll tell you which scenarios this will be good in. So we'll come back to this in a second, but really and truly, what you want to be thinking now, let's say when we're looking at these reduced risks now, we're basically looking at it in this scenario, okay? We're using that scenario for all of these examples. Okay, I'm just gonna push the charts a little bit higher. So we've got it here. So we get the push away, and let's say we have insurance entry 1 there. Oops. Okay, so I've drawn 3 examples here, okay, and I just want to kind of point these ones out to you. So what do you have here, right? First, let's look at number 1, then we have number 2, and then we have number 3. Okay, number 1, you've got the trade here. You can see on number 1, what we have over here is we have a push down, and then we have a flag. Can I manage it into that low there? Absolutely. If I took it there, I'd be running 1% by the time I come here. So I could take that. So a reduced risk entry, I can apply it on this scenario if I wanted to, but the risk entry is way better, right? But I can still take the reduced risk if I want to. The second scenario, we have a correction down there, and then we have the next one here. This one here, same scenario. I can take that because I can manage it into that low. So that's fine. This one here, I don't want to take the risk entry, because if I take the risk entry here, the odds are this can still develop and come back up now because we tapped into the base. So if I set a reduced risk entry down here, stop loss there, if it does start to commit, then I could actually survive that, and I could be in the trade. But again, this isn't the best scenario to take a reduced risk, but it is a scenario where you would pick the reduced risk over a risk entry. Now here, you've got a low there, you've got a low here, you've got a low here, you're trading kind of through this, you've then got this. This is a sign of where a risk entry would be better, but if you miss it and you want to go reduce risk here, it's not a good idea. Why? Because you take the trade here and you'd put stops somewhere in that region. By doing that as well, you have to come to a realization that you need to manage it into this section here to run about 1%. So it has to come here for you to get to 1%. Unfortunately, you've got a few inflection points on the way, and you'd have to get through the majority of them to get to your 1% to go to break even. So the odds are, the reasoning for this one is not great, but then if you got in for the risk entry up here, you would have then been able to manage into the first inflection point here before you even then had to worry about what if it comes back and hits me for break even. Then it's fine because you got protected well enough. And those are the scenarios where you kind of be thinking, okay, risk, reduce risk. Where do I get involved top of the structure? Can I get involved at the bottom? A reduced risk entry in itself is not going to make you money. A risk entry in itself is not going to make you money. You can see why Scenario 2, a risk entry wouldn't be good. Scenario 3, a risk entry would be great. Scenario 1, a reduced risk entry and a risk entry are both great, right? So I hope that was useful, and that kind of answered the question you had about some clarity around it. In terms of when are your homies arriving? Yeah, so I'm gonna drive down to the airport, and actually I was talking about those shoes before. I'm actually picking up them shoes, but I found some really nice ones, which again I can't really show you on here because I need to upload it. But yeah, basically I found some nice red Dunk lows. I'll put a picture in the next live I do. They come in at roughly around about 10 p.m. in the evening, and it's currently 12:57. So I'm gonna take my dogs for a walk very soon, in about an hour, and then go down to near the airport. There's like Thessaloniki, there's like a whole town bit area over there. So I'll go buy some shoes, chill for a bit, get some food, make a little vlog for the little shorts, and then yeah, that's it really. So 10 p.m. and then they'll be here tomorrow. So I might not be doing these lives for a week. I'm not sure, just because, you know, when you got guests over, it's kind of rude. But I'll try and make some YouTube videos if I get some time. Thought you were in the UK. Yeah, I lived in the UK for a while, but I decided to leave. I decided to leave the UK, I don't know if it's completely permanent, but I wanted to get my trading in order. So I needed to kind of go off and do my own thing. So I decided to kind of leave, go by the sea, live near the beach, and kind of just get away from the stresses of work and that work-life culture, that rush. UK was something else. Greece has been quite relaxing. It's been able to give me that opportunity to really just progress, learn, study, put my head down and progress in terms of my goals and what I want. And I think that's, at the end of the day, that's one of the best things you can do, is find a peaceful place with less distractions, and then you can just go full steam into those goals. So funny facts, did this give you clarity? Was it good? Do you have any questions about it in any way? I'm going to start clearing off these charts, because I come back to them and I'm like, oh my gosh, what's going on? All right, so today is not the day to clear them off. I'll come back to it and clear them off. What was that? Let's see how our EJ trade is doing. Oh gosh, I was drawing all over EJ. Let's see. Yeah, still hovering around. It's got some time on it, man. Like this is a prime example of why you need to be a bit more patient with some of these pairs. You know, it's fine you got out already, but you know, it's like there's no reason for it to come right back up at this point. So until it's like really tapped into these areas, that first ray line I've got, when it's tapped into those areas, then I can start thinking about, okay, this is where I might want to be a little bit more aggressive. And then if it pulls back there and does this, I know that's a possibility. So I might want to lock in there and be a bit more loose, or I might want to be aggressive and take 5% there. Depends where I'm situated on my capital. I would be more aggressive. I don't really care as much, but I know if we drop off, it's just going to tank. It doesn't need to stall within this gap. It can just tank and sell off. So it's kind of at a breaking point where, you know, it can just really drop off and work in my favor. It could stall here for a bit, accumulate in these areas, and then as it accumulates, one day, boom, just drops off and it goes there, and that's what I'm looking for. Can you review EU? Could you have seen the long come in and be super cautious of the short? Let's have a little look. Yeah, for sure. So I'll tell you how. So I'll answer your question a little bit backwards. So how could you be cautious of the short? Well, you would have looked left. Okay, this is a bit messy right now, so I'm gonna just clean this bit off. 1 second. Okay. So if we start fresh, right, what do we have here? If we look left on here, we've got this point here, we've got that point there. You're basically tapped into the origin, keyword origin of this liquidity here, right? All of that liquidity has been tapped in there. Then you look at how we tapped into it. We tapped into it with a double bottom. Such an essential point there. Even though you could argue that, oh, but we kind of missed this little bit of liquidity, what about that? Doesn't really matter. This overrides it because you double bottomed on it. After you double bottomed, this looked like it was going to create continuation to continue, but it didn't. It failed, right? That was the failure. So that's the biggest clue that now this is coming to the upside. So you want to just be looking for longs at this point, right? Because this is probably going to start making its way to the upside. And then in no time, you've got that structure. And then that's your 1, 2, 3 again. And then you take advantage of that for the sequence to the downside and you play that. And then DXY starts shooting to the upside. So you want to be careful of that override. So EU could have seen the long coming. Yeah, that the long would have been very obvious from that point I marked out. So I'm just going to show you the long. So if we go down to the 1 hour or the 15 would be perfect. Any point from this point onwards, which I've just circled here, mate, the longs were on the table. You could see why, because we failed. We completely failed here. This was your biggest clue. When we tapped into this, we failed here. We tapped into a base and we moved. So a long there would have been solid. You would have basically played it on the failure because we had the gap, right? So it made sense why it would come up. But then in this point here, we shot up and then we tested it again and we showed failure within the circle. At that point there, this is a great trade. Anything you found was pretty decent. And now that we've kind of confirmed that, you want to wait and you get this, and then you're going for the next trade and you move higher. Okay, so the trade you took twice. Yeah, so it was basically, he basically took the one down here. I believe it was that trade there where he took the trade down there, where you have to realize at that point there, he wasn't taking the trade knowing that price is going to come all the way to the upside. That's not why he took the trade. He took the trade playing it to that first area where it gapped to, but then it pulled back and took him out, right? But he was originally just playing it into these areas, but understanding that with everything included from the higher time frame there, this whole structure could fail and we could come to the upside. So keeping that in mind, positioning in these areas was high probability. I mean, not high probability, definitely worth it, because as it happened, these trades ended up flying to the top side and he could have got positioned on that. Again, I don't think he would have probably held on all the way, because at the end of the day, none of us knew that we were going to definitely break this area here. When we started breaking that area and then we started getting further continuations, that's when we understood, okay, great. This is where we can really start getting involved and we can see longs are really coming into play. So I'm just going to quickly clean that off one more time. So let's just look at this trade here, right? The one that Ibi took. This one here. Why did he take this trade? Well, you can see here, simple mechanics. You've got consolidation, right? That's your clue. That's your footprint right there. You've got a gap here. Okay, we know that that gap is likely going to get filled. What do we have? We have the bottom, we have the gap, but then we have another bottom. So we've created two bottoms. This is then established. This is a flag continuation to the downside. But we also understand, because of where it's positioned on the higher time frame, it could also fail. So what do we want to do? We still want to make money. We don't want to just sit there and wait for this to complete or not complete and then figure it out. We can see price is clearly created two bottoms and now it's making its way back up. So he's taking this trade to then take it to fill the gap. This one probably just missed his stop, the gap, and came back down. So he got out because he understood that, okay, this could be a part of the psychology. This could come down and eventually make its way back up and he'll get re-entered in those areas. So in theory, what he did was he just waited patiently. He saw that, okay, we had a small consolidation here. We had a gap. We're probably just coming in to retest that bit there and we're going to go. So I'll get re-entered there if I get taken out. And that's what he did. He got re-entered there. And then he took the trade and went. Same thing, I would say, in this situation here, you broke above. You could take reduced risk entry in those areas because of where you're situated, and then you're basically playing it for the long. You know, another one there, which wasn't the best. Wouldn't be surprised if this came down now and just create something to continue further, or you got some sort of two-touch, where the two-touch would look something like this. So if you take that bit of price action, came back up and did this into next week, and you had that. You basically have that and you can get positioned in there, similar to what we said on GU. Yeah. Again, it's one of them ones, you know, with all the gapping and things as well. Some people, they won't want to hold over the weekends as well. So no matter what happened, you probably would have been out the market today at some point. Yeah, let's have a little look back on EJ. Yeah, you know, this, like I said, it's Friday. You could arguably get out of this trade if you really wanted to. I'm happy holding on to it. I don't have my stops there. I have my stops somewhere up here. You could get out. I mean, what am I running right now? I'm running around about 2.4k. For argument's sake, I would even close that just to demonstrate that it doesn't really matter as well. Like getting in and out of these trades, you can literally just keep making money. I'm quite happy with this, you know, where I got positioned as well. Still quite high up in the run. This got legs. It's got legs. I don't think this is going to be your reversal. I think whatever it's doing right now is just trying to catch people on the buy. It's not going to. I don't think our trade's going to be this. I don't think we're coming back up. It's very unlikely at this point because we still have a lot of room to the downside. Any question, guys? Anything you want me to look at? All right, guys, I'm going to shoot off. I think we've had a pretty good one. Only went for about an hour today, but still, I think there was a lot of value there. All right, guys, it's been great. I look forward to catching you guys in the next one. Take care. Take care, Zephyr. No worries. If you guys have any questions, definitely shoot me a message on IG. I'll definitely have time to get back to you. Take care.